Good morning, everyone. You're watching the Market Fatafat on ET now. I'm Mubina Kapasi. It's a day of gains for the market. The Nifty has hit a record high, or at least it did so on an intraday basis before slipping off quite a bit from the day's high. We're absolutely flat, actually. The Sensex as well is just left with gains of 49 odd points after conquering 41,100 intraday. But this show is, of course, all about flagging off those individual movers and shakers. However, before we do that, we'd like to connect with the management of Thomas Cook as they have completed the restructuring of the business. That is with respect to the entire bit about demerging the HR business into Quest Corp, and of course shareholders as well are going to get approximately 1,900 shares for every 10,000 shares held. So let's bring on board Madhavan Menon, the CMD of Thomas Cook. Mr. Menon, good morning. Thank you for joining in. If you could start off by explaining to our viewers what does this simplified structure mean for shareholders and for Thomas Cook India, if you could take us through the details.
From a shareholder perspective, what we are trying to achieve is simplification of our structure, try and remove a lot of the cross holdings, as well as make our numbers look far clearer in the eyes of investors. For this purpose, we are actually demerging the skill development business within Thomas Cook, which is known as the HR business, and merging it into Quest. At the same time, we are restructuring holdings within Thomas Cook, whereby we are moving ownership of all the brands into Thomas Cook. We are, we are moving all the fixed assets back into Thomas Cook. So now what we will have is Quest will become an independent company where the shareholders of Thomas Cook will get the shares that are spun off from Thomas Cook's own holdings in Quest, and at the same time we will have a simpler structure for the travel businesses.
So now, after this restructuring, Thomas Cook India is a purely travel-focused company, is that right?
Well, it is a travel-focused company. We do have strategic investments in Sterling Holiday Resorts and DEI, and we'll continue to nurture these businesses under our ownership. The primary driver being both of them are adjoining in some form or the other to the travel-related business.
What's been the impact of, the collapse of Jet Airways and then the entire geopolitical unrest in Hong Kong on the quarterly earnings?
Look, as I've been repeatedly saying, 2019 has been quite a difficult year. It started off with Jet Airways, then we saw the terrorist attacks in Sri Lanka, we saw the disruption in Hong Kong. But the primary driver in my mind is the failure of Cox and Kings. I think this has created a degree of mistrust or a lack of trust in the travel industry as a whole from our customers. And therefore, we've seen the impact of all this on our earnings as we reported in the last quarter. However, I must mention that bookings have started looking up again. And this has been primarily on the back of several innovations. You are aware that we launched a new payment system where you pay 10% at the time of booking and the balance 90% at the time when the travel documents are handed over to you prior to travel. Now, this was more of an innovation from Thomas Cook, but we decided to launch it in light of the environment created from the failure of Cox and Kings.
Take us through the outlook on your margins. What are you penciling in?
So, the margins we've always worked to keep our margins stable, and that's an objective that we are totally focused on. We believe that things will return back to normal summer of 2020, and the initial indications that we're getting in terms of customer feedback, as well as the demand that we are seeing for some of our products, gives us the confidence that things will be back to normal. But again, it's something that we have to wait and see.
Okay, how have you read into the tax rate cut for the sector, to 18%, given that hotels were taxed at a high rate of 28%? Do you think this move will sort of lead to lower pricing at the customer level and, of course, in turn spur demand as well?
Look, I think the rationalization of rates on hotel bills at the GST level was a very welcome move. I think it actually clarified the structure a lot more. It made India an attractive destination from the point of view of foreign tourists as well as domestic tourists. And I believe that segment where the reduction is actually being witnessed is a very important segment for both these both these segments of customers. And therefore, I think it's a welcome move. I also believe that while the tax cuts, the cut in the tax rates across the board, corporate taxes across the board, was something that was very welcome, and I think we should focus on the benefits of that. Now, obviously, we come from a tax regime where there are incentives provided like MAT and everything else. So, a lot of these tax rates will work themselves in once all these earlier benefits are worked out of our system.
Okay, what's the, how was demand in the festive season? Did you see any uptick in your bookings? What was the, how did that turn out to be this time around?
So the festive season was not bad. It actually, we were post all these events, we were actually expecting a disaster, but I must admit that we did better than our expectations. And this also reflected the fact that, short-haul travel is becoming increasingly popular. And that's something that we have recognized. And we have actually restructured our travel business into a short-haul business, which basically includes any travel, both domestically and internationally, that falls within about 3 hours from the point of starting the journey. And the long haul obviously will cover Europe, the US, South America, and Australia. Now, long haul is still not in season. We'll only see that next year, but short haul has definitely revived.
All right, Mr. Menon, thank you so much for joining us on ET Now and, very candidly talking about business, how it stands at the current juncture. Let's take a look at the RWI small case, see what that one's up to as the markets come off the day's high. And remember, the RWI small case has been having its own set of pressure. I mean, it's really not exactly participating in that rally that we saw. However, this time around, it's relatively a little more resilient. So that's RWI small case at 564. We'll do one thing, we'll take a very short break on the show, but when we return, we'll kickstart the countdown of the top buzzing stocks. Let's kickstart our countdown. We have with us Ashish Kyal of Wave Strategy Advisors on the technicals and Pranay and Varun from the research team. Hi everyone, morning. And let's start off the countdown with Zee Entertainment. It's the second day that we are seeing a sharp crack in the stock price regardless of what the market's doing. And yes, it's 322 now for the stock as we speak. In fact, the losses have accelerated. It's 6.3% gone. Of course, we had an update as well coming in that post the entire promoter stake sale, a majority chunk being sold off. Subhash Chandra as well has stepped down from the post of being a chairman of Zee Entertainment. So that stock continues to go lower today in trade after a stupendous rally last week, by the way. Ashish, Bosch is one auto company or auto ancillary company that is, well, it continues to go higher, 17,000 rupees now. What do you make of this move?
The trend is positive for the auto stocks and Bosch has given a very strong move. So one can create long positions here, keeping a stop loss of 16,595 and expecting a target of 17,964.
And Pranay, let's talk about Shree Cement. Why is Morgan Stanley overweight on this one? I mean, we had the QIP as well. So what's the latest there?
Well, Morgan Stanley are saying that the company is in a very strong capital position after that successful QIP, and the funds have now basically brought them into a position where they can consolidate the capacity market share. So as of now, the valuations look comfortable to them. Operationally, it's one of the strongest players, and this capital boost now gives them the potential to go for some M&A opportunities and expand in newer areas which have better yields and prices. And now with the new season starting, they are expecting an uptick in the cement, and therefore the play over here for them is Shree Cement. They have a target price of about 22,000 on the counter with an overweight stance.
Okay, just 0.8% of gains seen in Shree Cement. And Varun, State Bank of India, Axis Capital has a buyer. What exactly is making them optimistic?
So they're basically coming out and saying that the asset quality headwinds for SBI have receded. The subsidiaries have begun to create value. We've spoken about that enough. And they expect the valuation multiple to start improving. So SBI trades at a really low price to book. Some re-rating is anticipated here. So those are the reasons primarily for the upgrade from Axis Capital.
Okay. Stock number 5 then is Bharti Airtel. Look at the way the telecom stocks today are cracking and how. Airtel Vodafone are cracking, taking along with it Bharti Infratel too. Now, today's Economic Times has reported that a top official says that the committee of secretaries that was set up to essentially suggest relief measures for the telecom sector has been disbanded, indicating that that 2-year moratorium on the spectrum payments is possibly all that the sector will get for now. So no relief as such now, or rather further on that AGR payment. Nothing more should be expected by the telecom company. Remember that the whole inter-ministerial panel bit as well that was mulled, that too is, as per the official, is a Supreme Court defined matter. So I suppose that may be one reason why you are seeing these telecom stocks fall in trade. Ashish, let's talk about Glenmark. We'd seen quite a rally come by last week in this pharma stock. But this week it's been taking a bit of a breather. So where do you see the stock move from here?
After the sharp rise, we are seeing a flat kind of a pattern which is like a continuation pattern. And I'm optimistic the breakout will come on the upside and we can expect a target of 360 or probably higher over the short term. And one can maintain a stop loss of 333 on the downside.
Okay, it's a buy target at 360 rupees. Quick break on the show, but the big voice this morning, Mark Mobius, tells us how rapid digitization makes it difficult for companies to hide corporate governance issues. Listen in to an excerpt of this exclusive conversation and stay tuned for more all day today.
Because of the internet, because of smartphones, because of this incredible speed of communication, it's going to be more and more difficult to hide poor corporate governance. And more companies will be exposed if they have bad corporate governance, and that'll affect their share price. On the other side, those that have really good governance and are more transparent will do quite well, I believe. I mean, it's true globally, by the way, not just in India.
Pranay, let's talk about Mahanagar Gas and what Macquarie has to say about both the gas companies, Gujarat Gas and Mahanagar.
Well, they have an outperformed stance over here, particularly on Mahanagar Gas, and the target price has also now been increased by nearly 9% to 1150. The reason for that is the increase in their earnings estimates by about 7 to 11% for the next couple of years, and the valuations too are looking attractive at the current levels. What they are saying broadly about the gas companies that you mentioned, like Gujarat Gas and IGL, is that the gas company theme will continue to remain strong, whether it is because of the increasing tilt towards more friendly fuels for the environment, and also increasing distribution and connectivity across households as well as industries. They believe that a strong double-digit growth will continue over the next 3 years.
Okay, that is Mahanagar Gas for you and Macquarie's recommendation. By the way, MGL has certainly seen a great rally in the last month or. Varun, what's the news when it comes to Eris Life? Is 2% down today.
So we're just flagging it off because it's been showing up in a lot of block deals and it's seeing a lot of institutional interest. So, yesterday again it crept up in quite a large volume of shares traded. You saw Link Investment Trust buying 2.44 lakh shares at 411 rupees per share. You saw Emerald Investments buying around 35.8 lakh shares And then your sellers were Amar H. Patel and Ms. Bikalal Chamanlal Shah and Hetal Rasiklal Shah. So private investors exiting and institutions participating. So let's say it's just something to keep an eye out for.
Right, it's 2% gone, by the way, right now for an Eris Life. Let's move on and talk about names from the aviation pack. Indigo, some important news came in last evening. Not so great news because the aviation regulators clearly not happy with the pace at which Indigo has been replacing all its faulty engines. It says, and I quote, the efforts to replace all unmodified Pratt & Whitney engines on the A320neo aircraft by 31st Jan 2020, that's the deadline given by the regulator, don't instill enough confidence. And further, they've been given instructions to ground one old A320neo plane with the unmodified engine for every new A320neo aircraft added to the fleet. Indigo is down by about 2.8%. Ashish, DLF, big gainer for the last couple of sessions. Today, however, taking it a bit easy. What's your stance here?
Yes, DLF has been an outperformer for many weeks now, and I think the overall outlook will remain positive. Any dip should be used as a buying opportunity in this stock, and one can maintain a stop loss around 209, expecting a target of 226 on the upside.
Wrapping up. Okay, and Ashish, very quickly, also wanted to get in a word on an RBL Bank.
RBL Bank, again, we are seeing a very strong recovery in the banking stocks and Bank Nifty touching new highs. So I think RBL Bank should also continue to rise. One can create long positions, keep a stop loss of 340 for the target of 368.
Target 368 for an RBL. But with that, we're out of time, so we'll have to wrap it up. Ashish, thanks so much for joining in. Pranav, Arun, to you as well. Coming up next is Markets at Noon.